what are the key steps to developing a successful product strategy for a co-lending platform. So what should be a successful product strategy? The product is more important. Then what are the strategies for aligning underwriting models in co-lending arrangement to manage risk and ensure successful partnerships? So risk is another criteria where both the partners are buried. So how it can be underwrite in such a manner that the risk would be minimal and it can be a successful partnership for long term.
So thank you for having me today, and a very good evening to all the participants who are participating today. So it has been quite a fruitful discussion with all the other panelists, and I would summarize these two questions in this factor. Firstly, that as a company, we are only in the PSL affordable housing loans, which is less than 30 lakh rupees. And we are tackling that problem where you're servicing tier 2, tier 3 and tier 4 cities. So it's a different angle. And on top of that, everything is absolutely on a mobile app. There are no paper forms. There's no human intervention as per se. So it's a very different way of lending in the secured home loan business. In terms of co-lending, we have had multiple integrations. We've had integrations with a very large housing finance company also. We've had integration with a private bank also. And soon we are starting an integration with another public bank also. So we've had a gamut of integration. So there are some experiences I'll share and I'll answer those questions. So firstly, in terms of the product strategy, we have to, like my co-panelists have mentioned, we have to divide it into CLM1 and CLM2. In CLM1, the basic fundamental is that you have to get your LOS right, your loan origination right, because your LOS systems have to be integrated because you're underwriting together instead of underwriting later. So you have to get your origination right. And while in CLM2, you need to have your LMS right because you're doing it after you have already disbursed the loan as an NBFC or an HFC. In the CLM2, you have only two criteria, which is your KYC criteria and second is your product fit criteria. So if you get your rule engine right, what the bank wants as a product, you will ace the CLM2, right? And even in CLM1, you have to understand their underwriting style, that what their underwriting style is, and you have to align your underwriting style with their underwriting style rather than trying to impose your underwriting style on the bank. So for a successful partnership, if I would categorize, you have to have a policy alignment, which is absolutely critical. And policy alignment simply means is what the bank expects versus what you want. Second is you have to have an accounting alignment, accounting process alignment, that when the money will come in, when you will provide, will it be on T+0, T+1? When would you amortize the money and how would you take it forward, right? Third is the servicing alignment. Servicing is simply that how will you collect the money? Will it be directly into the escrow account? Will it be only through NACH, ECS? Will checks be presented? If there is a T+2 issue happening, then how will that be treated? Would that be treated in the DPD or no? And then post-facto disbursement servicing alignment is that if you take it to SARFAESI, then who will be the initiator for SARFAESI? How will be the legal cost divided? So all those things are covered in the servicing agreement, right? That's the servicing alignment. The fourth and the most important aspect is understanding the product requirement of the partner, that what product does the partner want and how do you integrate that product. So if the partner wants only urban home loans and no home loans in tier 3 or tier 4, then you have to have that product alignment. You cannot have, like, for example, if you tie up with a bank which has only, say, maybe 500 branches. So maybe the bank will only want to operate in those 500 branches and your overlapping is not there. So that has to be fixed at the primary goal, right? So these are the things to answer your first questions. On the second question, the risk alignment between both the HFC or the NBFC and the bank or the non-bank, you have to get your rule engine and risk determination engine right. This simply means is take all the policies of the bank, align it with your policy and put it in your own product rule engine so that when the file goes to the bank for underwriting, it is already underwritten for the bank. So they only have to see it rather than actually wanting to approve it, because that will slow down your process and you might lose that customer. The second important factor is get your compliances right. that compliance is simply as simple as KYC compliance. You have to get your compliances right. Third is the area and geography categorization of the customer, which areas you want to go, which geographies you want to go. Because that also determines for the risks. So certain places the bank would not want to lend, right? And that will, again, you have sourced the customer and you lose the customer. And majorly you have to get the underwriting style and information alignment. So basically the underwriting style, how they want to underwrite it or how they have been underwriting it. So their information you have to provide that however their style is. If you try to impose your style at the starting of the arrangement, it won't really work. So you'll have to take their criteria also of underwriting. And one tip which I would like to share with everyone, which really worked for us, whichever bank or whichever non-bank or HFC you want to work with, first do a direct assignment with them. As soon as you do a direct assignment with them, you will actually know the exact product criteria, what they want. So because the portfolio that they will absorb, you will actually know what the credit criteria is. That will be the single issue, how your entire risk will be sorted out with the co-lending partner. So that's my take on the co-lending part. And I feel that it's just, we are just at 1% of the total potential. I feel there's a very long way to go. And a lot of technology is going to be used and is being used. So it's an opportunity which is unparalleled. And I mean, the government getting this and the RBI getting this is one of the best things that has happened for the end customer. That at the end of it, it's a nation building exercise and we should participate wholeheartedly into this. So that's my take, Ashish ji, on this.